Good morning, everybody. It's the Flow Show. I'm your host, Sean McLaughlin. That's your other host, Steve Straza. Straza, how was your weekend, buddy? A lot of golf? A lot of golf watching?
A lot of sun for me this weekend. No golf. No golf.
You don't look as sunburned as you looked last weekend. Last weekend, you came back to work on Monday. You looked really sunburned.
I've been SPFing up. So, yeah, I learned my lesson.
Hey, I mean, you're in the Florida Keys. I'm in Colorado, but we had summer-like weather this weekend too, man. Mid 70s all weekend. It was awesome. It's still that way today. I want to be outside.
This is my favorite month. I mean, April, I bet you guys got some pretty flowers blooming over there.
They're starting to, yeah. Yeah, looking good.
Good
All
time.
right, so this is the Flow Show, and what we do here in the Flow Show, if this is your first time here, this is where me and Steve kick around some ideas of some potential options trades, and we show you how we kind of walk through the steps of how we come up with a trade. We don't always land on a trade. Sometimes the market just doesn't offer us any good opportunities. More often than not, it does. And we walk through the process, why we like the trades, how we're going to trade it using options, where we're going to manage risk, where we might take profits, all that stuff. We kind of walk through it here, and you see how we go through that process so that, maybe this helps you as you're trying to put together your own options trades, right?
So the current environment continues to be a tough one for me in terms of putting on new longs. So I brought along a couple of ideas, not looking on the short side at all, but we can talk about the trendless or sideways approach.
I like it. That's kind of where my head's at. So you're speaking my language today, buddy.
I'm going to show you the potential longs first. So this is the NASDAQ equal weight, QQEW. This is an equal weighted version of the NASDAQ 100. And it looks like a lot of things do right now where, this is pretty failed breaky here. Where's the tool I'm looking for? Right. This is the prior cycle high from late 2021. And then this is the current high, the all-time high. And we just kind of crested right here after making a new all-time high and a rolling over, at least for now, right? So something like that, right? We're also seeing a lot of this at the individual component level, but I do want to show a couple that have stood out as leaders with some, standout relative strength over the past few weeks. Here's Taiwan Semi. We all know this name.
Yeah, we had a trade on that one earlier this year that played out really well for us.
So you're right here at the upper bounds. If this holds, it's probably a great entry point for a new long. We also have two Mag 7 names. Google, let's just clean this up a little bit. I'm already long. But I think, again, just on this breakout above the prior cycle highs, in this tape where a lot of tech stocks are giving back, Google's not just breaking out, but it's breaking out in a real way. Barely giving anything back. Friday was a nasty day for a lot of things. If you look at Google's candle, you can't even see it, right? So definitely holding up better than its peers. And then,
hey, quick question. Let's stay on Google for just 1 second. I'm sorry to break your rhythm. Do you have any insight on whether someone should trade Goog-L or just straight Goog, G-O-O-G?
I like the Class A. I believe you have voting. Yeah.
So, but they trade basically in lockstep with each other, right?
Yeah, they're not very different.
Okay.
I don't know the nuance of the two share classes, what exactly makes them different, but I believe it's mostly voting rights stuff, and Class A typically have the voting rights.
I mean, the thing that's confusing to me as the options trader is that there's plenty of volume and liquidity in both instruments, and so I wonder if I'm, what's that?
Is that not usually the case when there's two share classes? The options market tends to cluster into one.
Yeah, there's usually a favored vehicle, and then that's where all the volume is. But there's sufficient volume in both, so I'm just I guess it doesn't really matter which one you pick. But I was just curious what you think. You prefer the Goog-L?
That's always the one that I trade.
Yeah. Okay, all right. Because I feel like last time I did a Google trade, I did the straight G-O-O-G.
You did the Goog.
I did the Goog. Yeah.
I don't think there's much of a difference.
All right. Sorry to disrupt you there. Keep going.
Question. Wish I had a good answer. Amazon. Same thing, right? Really clean.
We're in Amazon.
This one's got like a Taiwan Semi look to it. All right, so Sean's already long these.
Oh, wait, no, hold on. I apologize. We just got out of Amazon. Amazon just hit our profit target.
Probably because it was right here at those prior highs.
Yeah.
If Amazon breaks out, in the current tape, I mean, this one against 187 all day. I love
Yeah.
this.
We just got out of Amazon on Thursday last week. So we had a nice trade on that one. Hit our profit target. So no complaints.
So, these blue chip techies, maybe not the most exciting trades at this point, but still look like really good trades. And I think that people are starting to look elsewhere and leave the tech trade behind. And there's still some really good looking charts. So I think that's an important point to make. Another one, these squeeze names, Sean, not all of them, right? Because GameStop is literally falling off a cliff today. Not all of them are working, but some of them are squeezing. Chewy made a nice move last week. I know you're probably not going to like this setup, but this is for traders too. You got a little scoop and score setup here. You had a big momentum divergence, which I'm not going to show on this chart. But I think against, lower bounds here, 1650-ish, this is one we could take a shot on too. Don't love the counter trend kind of cute trades in this environment, particularly when the higher probability trades are struggling, right? But
yeah, I was just going to say, I like this trade better if we have kind of a confirmed uptrend in the market. But right now we're kind of mucking around and we feel like we may be at or near an inflection point. So I don't like this trade. When it comes to short squeezes, the setups that I prefer are the ones like the Carvana that we got into, but that one hasn't worked. In fact, we got stopped out this morning. You see right there, got stopped out this morning. So that I would prefer a short squeeze setup on a chart that looks like that if I were to put one on today. But
was there much left? Like you got stopped out, but there was still enough there to even close it out?
Not much. I think I got out for like 60 cents for those calls that I paid $4 for about 3 weeks ago.
Mine are still sitting in my account. They're probably zero. We'll take a look later. One more. Coupang. You will like this one. I don't know if I like it here today, but this is the same setup. Let me clean this messy chart up. This is the same pattern we've been buying this entire cycle. That's been very, very, very good to us. And I think that continues. Let me just flip it to a line chart so you can see it. But you do have first of all, I want to show the breakaway gap, right? We're gapping above this monster resistance level. This is the breakout level of a beautiful rounding bottom reversal. And I mean, if we're above, it's really a range between 20 and 21. If we're above there, it's a new uptrend underway for this, I think, very exciting online retail name that serves Asia, Southeast Asia, because the online retailers, how I feel. It's, I think, the best way or the purest play to make a bet on the consumer in these emerging countries or, emerging regions of the world. Right? You buy the retailer that serves them. You buy their Amazon, and you're basically making a demographical bet. So Coupang above 2021, reversals in. Again, though, if we zoom in, Sean, tactically, you could probably pick a better entry here, right?
Yeah, I think patience would pay there. Maybe keep an eye on this for the rest of the week. We might have a better opportunity later in the week. Is this also a highly shorted name?
That's a good question. I don't know. I'll have to get back to you. I
Okay.
don't think so. I don't think too high.
Okay.
John Deere is next. So what we just talked about would have been directional longs.
Mm-hmm.
Now let's talk about some sideways. We were on the analyst call Friday, missed you. And JC,
yeah, I had a little doctor's appointment, couldn't attend. Sorry, guys.
Missed you. JC wants to sell the Primo. So I said, hey, John Deere looks pretty damn good to me from a Primo selling standpoint. Really wide range. This one just never ended up looking like the others, like Caterpillar and so many industrials that broke out of multi-year ranges and went on to hit one or two price targets already this year, last year, over the past few quarters. Deere just still stuck sideways. I think we could even draw a little tactical level here at these pivot lows, right? So there's a couple ways that we could play this. But when you see this chart, does it make you want to sell premium?
It does. I like this one a lot. This one's a little tricky though, because May expiration, which is where I would default to put this trade on.
Yeah.
Deere announces earnings on expiration day. So if we were to put a delta neutral trade on, it's possible that the premium is going to stay in that position all the way to expiration day. And then it's like, it's a binary bet on that last day.
Yeah.
I mean, I'm not saying it can't work. It's just, it might be tricky. And so
Like
you
when
might have to go further out to June, which June is a little farther out. I mean, it's like 67 days. It's farther than I like to go, but you can do it.
Explain why you want a short duration contract here.
Well, you want to stay, whenever you're selling premium, you want to be, generally no more than 2 months away to expiration. Why? Because that's when options premiums begin to accelerate their rate of decay. A long option will always have some theta decay every day, right? But if the option has 6 months till expiration, the daily theta decay, which is the value of the premium, is not going to erode that much, maybe just a couple of cents every day. But once you get into the last 2 months, and particularly the last month of expiration, if those options are out of the money, which is what we would like it to be if you're selling premium here, that's when the decay will happen, will start accelerating, which is good for us, right? If we're short the premium, we want that decay, we want the value of those options to come down so that we can cover them cheaply. So you want to be positioned as, in the sweet spot, which is generally 1 to 2 months to expiration. That's when you want to put the trade on and then ride that theta decay. So again, going back to before, ideally right now, if I were to put the trade on for most premium selling strategies, I would be looking at May options because we still have 32 days of expiration right now. But it's tricky because they announce earnings that morning of May 17th. So yeah, I
hear you. Hold on. We have, so we'll do the same setup, same idea. Let's find a different vehicle. I think this
no. I still like this vehicle. Let me finish my thought on that, because here's why I like Deere. The fact that there's earnings doesn't necessarily scare me, especially when I define my risk. I want to do an iron condor with this trade. Maybe I should have said that up front. I want to sell an out of the money call and out of the money put, and then protect it further away to define my risk. So earnings are not going to scare me that much. But here's what I really like about this trade, especially if we go to June, Straza, is that I looked it up this morning. We could sell an iron condor where we sell the 360 puts and the 430 calls, and then buy the options $10 further away. So it's a $10 wide spread on either side. We could get about 430 when I looked at it earlier this morning. I feel like that's a really juicy amount of premium. So the most that spread could be worth in a worst case scenario, if I were to cover it to lock in my loss, the most that spread could be worth is $10. If I'm collecting 430 for it today, that means the most I could lose is 560, let's say 570. But more importantly, the 360 strike and the 430 strike feel very far away to me. I feel like you're looking at a very long-term chart there. You got a 4-year chart on there. Me, I would look at like the most recent 12 months. That's all I really care about. And when you look at it in those terms, Straza, 430 and 360 feel pretty far away, comfortably far away for a trade that, once earnings gets out of the way, as long as nothing drastic happens at earnings, I would be willing to bet that we'd probably hit our profit target soon after earnings on May 17th.
So you're talking about let's talk about exactly where we're setting this range for selling these calls and puts. So 430 here on the calls, right?
Yep.
And then you said
360 for the puts, which corresponds pretty well with that level of support, it looks like.
Now, you're going to get more doing it this way, right? Because somebody was watching the video saying, well, why not set the strikes where I had the lines drawn, which would be more like 350 and 450. You're going to make a lot more. You're going to collect a lot more selling them here on these blue lines. Is that why? Or you just think they're sufficiently far away enough? Like, why wouldn't we set the calls to 450?
Actually, that's a very good question. You can sell the 350 puts. The reason why I chose those strikes is that when I looked at the options market right now, and at the money straddle, which is the June 400 straddle, it's pricing in an expected move between 360, and 430. So that's
Wow.
kind of how I like to set my strikes. Nothing wrong with going further away. I mean, if we go to 350, I'm going to put the trade together here on my side real quick. You don't need to share my screen, Gene, but I'm just give me a sec here. I'm going to create these numbers to give you a real money at the moment price of this spread.
You know, it is a wide range, Sean. So
Yeah.
let's see. So
All right. So look, if you sold the 350 puts and the 430 calls, you can get 317 for that Iron Condor right now. Again, buying the wings $10 away.
Mm-hmm.
Still not terrible, and we got much more room to be wrong.
And that's with the 350 puts.
That's what the 350 puts.
Right.
So if you don't like the 360, you can go $10 away. I mean, you're basically giving up $1, right? You're going to pay,
Yeah.
You're going to get 430 if you do the 360 strike, or you'll get 320 if you do the 350 strike.
I like taking less.
Yeah, I don't mind taking less.
Yeah.
Because when we put these trades on, we're never doing these trades because we want to make the absolute most money we possibly can. No, we're putting these trades on because we want a high probability of success.
Yep.
And so giving us more room is a good thing. You know what, Gene, real quick, just for maybe some of the beginners, maybe flip to my screen real quick.
Yeah,
I'll just show people what this trade looks like on a P&L, like a risk graph. You see it on my screen, Gene?
Yeah.
Okay, great. So you can see here on my chart, I've got the Iron Condor created at the 350 puts and the 430 calls, and then protecting $10 away. So you can see as long as we stay between 350 and 430, then we're in the profit zone in here. That's where we want to be. And as we get, as the days go by, if I move forward in time, you'll see that purple line, which is the P&L graph today, right? As I move forward in days, it starts morphing more and closer to that blue line, which is what the position would earn on expiration day. So as long as we're in these areas, and I mean, from a risk management perspective, we could lean against what? Probably that 355 level on the downside that you have on your chart there, Straza. Let's go back to Straza's chart now. 355 is the most recent low of this year, right? Am I close or? Yeah, about 355.
Yeah.
We can even use that as our risk management level. If we close below 355, that means the range is not holding. We probably want out of this trade.
That's where I have the black line drawn here.
Yeah.
Absolutely.
Yeah.
It's
And then
28% range from the lower to the upper bounds. It's not a small range.
Yeah. I like this trade. I like this a lot. I am going to put this trade on Straza. I think it's the right time for this type of trade. Because we've got a kind of an undecisive market right now, getting a lot of mixed signals. We still see some great setups in some names, but we're seeing a lot of momentum names starting to roll over on us. I've been getting stopped out of positions the last few days, as you have too. Feels like the right trade at the right time.
It really does. Again, I'll say it. It's just I have a bias towards directionality, right?
Me too.
I tend to want to be long, but this is such a great just illustration of how lucky we are as investors to have access to a liquid options market, because if we were just dealing with common stock, there'd be no way to bet on sideways in this chart, right? You could only do this via the derivatives market, namely options like we're doing here. So in an environment where I'm constantly coming on here and complaining, I really aren't loving any of these new long setups, any new entries here, you could bet on sideways.
Hey, I saw a comment come in there from a great name, Dogwater. He says, DE is a short. And you know what? You might be right. And the great thing is that you can get short DE and I could put this trade on and we could both make money because I got a lot of room to be wrong, right? You can make money from here all the way down to 355. So can I. As long as we don't break 355, then we're both winners. So how about that?
And, maybe it is a short. I guess we'll find out. But something like this, just a sloppy range, sideways 200-day moving average. Odds really aren't in your favor being long or short. The odds favor being trendless.
Yeah. One other question I see in here from Frey Lee. He says, is this considered a hard trade? No, Frey Lee, I don't consider this a hard trade.
It's an easy one.
Yeah, doesn't mean it's going to make money, but we're basically betting on nothing happening, right? And nothing happening never feels like a hard trade to me. And yeah, so iron condors are the types of trades that we want to put on when we expect range bound action. If we think that a deer is going to break out of this range, either up or down, then this is not the trade we want to have on. We want to do something else. But iron condors are definitely bets on, well, they're bets on two things, but the two things tend to happen together. You're betting on sideways action, and you're betting or will be benefited by a collapse in implied volatility. So actually, it's a good point. Gene, go back to my screen real quick. Maybe we should have highlighted this. On my screen here, I got the deer chart. You'll notice on the bottom of my chart, I got this blue line. This is the trend in implied volatility, which basically means the expensiveness of options, right? When this line is near the upper end of the graph, that means options premiums are expensive relative to itself, right? And when it's down here at the low end, like it was in early March, that means premiums are cheap. Well, as you can see, today, we're not at the highest levels we've been over the past year, but we're definitely in the higher third of this chart. So we're making the bet that it's likely that this will mean revert lower, and we will benefit from that as well. But the bigger bet is sideways trading action. And if sideways materializes like we expect that it will, that will generally pull implied volatility lower. And especially after earnings gets out of the way. On that May 17th earnings date, you can bet that implied volatility will probably drop off a cliff at that point. So if we're still in the trade, then we will likely benefit from that implied volatility drop.
I love it. Yeah. So this one checks multiple boxes.
Yeah.
In many cases, what we're doing as trend followers is betting on trends persisting. And the trend by definition is moving up or down. But another thing that persists is a lack of trend sometimes. So in this case, we're simply betting on no trend being in place and that persisting. So that works as well.
The trends are like inertia, right? And right now the inertia is sideways, and we're actually kind of benefiting from the trading action late last week. That little sell-off just juiced the options premiums just a little bit more, which I like it. I like it. That plays to our benefit here.
Good.
All right, Caesar, maybe we'll talk about a jade lizard someday. Those are fun trades. I don't do a whole lot of them, but we could talk about those one day. We'll see. Anyway,
you'll have to teach me.
Yeah. All right. Straza, this is great. We both agree on this deer trade. We're putting it on. To recap, we're selling an iron condor. We're going to sell the 350 puts and the 430 calls, and we're going to protect it $10 away. We're going to collect in the neighborhood of 315, 320 credit to put the trade on. And we did good work here today, buddy. Awesome.
And this was a little different.
All right. Thanks for tuning in, everybody. We'll do this again next Monday. Same time, same channel. Until then, we'll see you on the morning show tomorrow morning. Take care.
Everything's gonna be alright.